Good morning, everyone. This is Doug with your Right Way Options morning market prep video for June 21st, 2017. Well, yesterday, if you remember, I kept mentioning the fact that I was a little bit nervous and a little bit tentative just simply because we left a gap behind. We gapped up to new highs. That always makes me nervous and always makes me want to be a little bit cautious. Well, yesterday was mostly choppy, not really going anywhere till the end of the day, and we started to show some signs of trouble. Now, as of this morning, the diamonds avoided a bearish engulfing candle by just a fraction. But that's still not a good looking type pattern. Now, we have to recognize that overall, the diamonds is still trending higher. Okay, we have strength here, and that's a good thing. But we always have to temper what we see in that direction, as because eventually a reversal does occur, a full-on reversal will occur, and we've been experiencing those intraday and back and forth all over the place. And now we catch another one here. So just, basically another day, another reversal that we're having to deal with and make decisions on. This one gives me a little bit of caution, not so much because of what I see in the diamonds, but because of what I see in the SPY. While the diamonds held up pretty well, the spiders gapped down and then ran and nearly filled the entire gap to the downside. This has much more of a look of a potential reversal, and you can see how this can be very damaging to an account if you're trying to really do a lot of trading in this environment, because you get whipped back and forth so often. It's difficult to be in a trade. It's difficult to have any trade management because you set a stop and you just get stopped out. They whip you out of that trade. So that's one of the reasons I am exercising caution here. And as a matter of fact, I will continue to trade long because the overall trend is long. But I do intend to decrease my position sizes and to trade less. I'm going to really be extremely picky in the trades that I take. They'll have to be very, very good setups, and then I will plan to trade them with a smaller than normal position. If I get whipped out, no problem. If the stock does perform as I expect from my entry, then I can always easily add to a trade. So I'm going to be exercising a little bit of caution, particularly this morning. Now, currently, futures are pointing to just a slightly bearish open. Not much there, just a slightly bearish open. And honestly, I was expecting to see a bullish open today. And the reason is because of those earnings on Adobe. Adobe blew out earnings, record earnings, gapping way up this morning. And Adobe being such a big important tech company, just was kind of expecting those positive notes that came in the aftermarket yesterday would influence a little bit of bullishness this morning. But so far, that's not been the case. As a matter of fact, they maintained kind of a negative look to the futures all night last night. If we take a look at another earnings report in FedEx. FedEx is one of those companies that people use as kind of a marker as to the health of the consumer. And clearly it's been strong, been very strong. And the news came out yesterday, and FedEx had great earnings. But you can see now we're getting a little bit of question whether or not it was good enough for the investors. It's not so much about the number, it's how people react to that number. And we're starting to see just a little bit, of a hint that they might not have been quite as impressed as they were hoping to be with the numbers in FedEx. There's nothing wrong with FedEx right here. It's just that they were hoping for a little bit more, it looks like. So today on the earnings calendar, after the close, we have another couple of companies that are really important, particularly to the tech sector. MU is reporting today after the close. And you can see it's got a little trouble here. Big warning shot here. And then a couple potential lower highs setting up. So this might be showing a little bit of weariness and is going to need a pretty good number to maybe kick us back. And it's going to be important to the tech sector that occurs. We also have Oracle reporting numbers. And you can see in this price pattern that Oracle has clearly moved itself higher. Okay, clearly looking strong. But we get then this pattern, this shooting star type pattern right here at price resistance. And you have to go, okay, now I wonder what's going to happen now. Where do we go from here? So be very, very careful. If you decide to trade one of these, the whip lately has been extreme. I probably will continue to avoid earnings like the plague and not trade around them just because they're so unpredictable. So that reports after the close today. Again, going to be very important to the tech sector. When we look at the tech sector cues, I'm a little bit concerned here. And that concern is just simply because we're not responding well to resistance. We get this big warning shot, we rally up, we hit price resistance, and we pull back. We hold support, rally up again, and now have another reversal picture here suggesting that the cues are going to test lows again. They may not come all the way down here. They may find another point a little bit higher in here to rally off of. But right now, this would suggest, this chart right here, the price action of this suggests we're having difficulty with resistance. And this reversal pattern suggests the potential of a new low in the cues. So watch closely. Be careful how you move forward with this market. I don't know if or when we're going to get a definitive decision to go make a direction happen. But until that occurs, we have to be really cautious and careful. I don't know about you, but this chop is getting annoying, and it's not something I want to mess with. We've had great profits this year, just phenomenal profits, to be honest. And I don't want to give it back getting chopped up in a market like this. So I'm going to do a lot of standing on the sideline waiting for very good quality trades only, and then I'm going to trade them with smaller position sizes until I see proof that we're going to stay in the direction that I was expecting, and I can always add to the trade. If we look at IWM here, IWM had kind of a, well, it's made a decision. According to this chart, it's made a decision. We rallied up, broke through that resistance high that we'd been fighting for a long time. Everything was looking positive. We gave it back real quick. We ran back up, and it gave us hope that we were going to break back through. And then yesterday showed that we are giving it up, and we're gapping down this morning to a new low. At a minimum, IWM should see this level right here, this price level. Come down into here and test this. If it breaks through there, we have this little level in here. So IWM's not really wanting to participate or help out this overall market. So that's kind of where we are. I will continue to look for long trades because the market continues to show overall bullishness, but I'm going to be really, really picky on the trades I take. And I plan to trade less until this market kind of settles in a little bit better. I just hate this chop. So with that, I hope everyone has a great day. Right Way Option members, we will be at regular time today, but we may be moving it to the main room just simply because Rick is not going to be around. So we may move it to the main room and go at it from there. So I'll see you all at regular time. If this is the first time you've seen this information, would like to receive this information daily, please do me a favor, click the subscribe button on YouTube and click that follow button, like and follow button on Facebook, so that you'll be notified when these videos come out. I put out content daily, and on my YouTube channel there's a lot of free education that you can take advantage of. So everyone, take care, have a great day. I wish you all, great profits, and I will talk to you all soon.